The International Monetary Fund says the coronavirus pandemic will cost the world's economies $9 trillion over the next 2 years. The warning comes as countries around the world face prolonged lockdowns as they try to contain the outbreak. The IMF's chief economist says it is the worst economic shock since the Great Depression of the 1930s.
Flattening the spread of COVID-19 using lockdowns allows health systems to cope with this crisis, which then permits a resumption of economic activity. In this sense, there is no trade-off between saving lives and saving livelihoods. Countries should continue to generously support their health systems, perform widespread testing, and refrain from trade restrictions on medical supplies. A global effort must ensure that when therapies and vaccines are developed, both rich and poor nations alike have immediate access.
Our correspondent Alan Fisher tracking this story for us this hour on the News Hour. So, Alan, this will be focusing minds when it comes to finance ministers around the world.
It is a pretty stark assessment from the International Monetary Fund that the global economy will essentially contract by 3% in the first quarter, and they're hoping that in the second half of the year things will improve. But they admit that that might not be the case. If the situation gets worse, if the lockdowns continue, then this just might be the brighter side of the economic forecast. Of course, there is always the opportunity that things could actually get better, and certainly they believe that may well happen if there is to be a recovery in 2021, saying that in that time we could see the whole global economy rebounding by about 5.8%, but it will be slow. And it will be patchy because different countries will come out of this at different points. Talking about how it impacts various parts of the world, in the United States, you're talking about a loss of 5.9% in the economy. In Europe, where they use the euro, so excluding the UK, 5.7%. In Japan, down by 5.2%. And China, growth of just 1%. Now, it looks as if China is getting out of this quite well. But when you consider that last year they reported growth of 6%, you can see just how severely that has hit their economy. What the IMF says is that when all this is done, you have to get away from the idea of deglobalization because that won't help the global economy. And also, there has to be fiscal stimulus across several countries. It has to be coordinated. It can't just be piecemeal. And they say in that way, that could rebuild the global economy by 2021. But as I say, a stark assessment from the International Monetary Fund.
And as far as the US economy is concerned, specifically, Alan, where you are, Donald Trump is saying, look, I am the guy who can or will choose not to restart the economy when the time is right. Other people saying, no, it has to happen in stages. And on top of that, you had claims for 17 million people putting in claims for Social Security in the States in the space of 3 weeks. And that's never happened before, ever in the US.
No, Donald Trump, to be clear, Donald Trump doesn't have the power to order states to reopen. What he can do is put a great deal of pressure on a number of states, a number of governors, and say, look, you have to do this. But he doesn't have the power to reopen the economy. And many states are very much in line with public thinking in this, which is we will reopen when the scientists say it's safe. Now, there are a number of organizations who are tied to Donald Trump's re-election effort, who would be regarded in this country as right-wing, who are saying that they are going to start organising protests demanding that the economy be reopened. And it may well be there is a gradual reopening, but you'll remember that Donald Trump was talking about having the economy up and running again by Easter. Well, that was last Sunday. He's now talking about May the 1st. That seems unlikely when a number of states are saying that their peak is still 2 weeks away. So that would take us towards that date. This is going to be a long, slow process. And you have to see it through Donald Trump's eyes. He sees it through the prism of if there is a strong economy, then he will be re-elected. That's what he believes. That is what his campaign has been building on. And that is what been building up to the point when the virus hit. And he thinks if this continues, then the economy will be wrecked. He will get the blame, and therefore he won't be re-elected. That is why he is very keen to reopen the economy as soon as possible. But looking at the figures from the IMF and what Donald Trump is saying, it seems unlikely that in the second quarter, which would take us through to June, for those who don't speak financial talk, which would take us to the end of June, they're saying that this is going to impact the global economy and it's going to impact the United States, and it could well go on for a period after that as well.
Alan, thanks very much. Let's bring in Gareth Leather. He's a senior economist at Capital Economics, a consultancy in London. Gareth, welcome back to Al Jazeera. These numbers are staggering. What do they mean?
They are unprecedented, and I think that is because the economic shock that we're facing now is unprecedented, that large parts of the global economy are effectively shut down to contain the spread of the coronavirus. And until health officials and governments are confident that the virus has been contained, these measures will remain in place and the economic shock will continue.
We're seeing some economies begin just to loosen the strictures inside which they've been operating lockdowns or partial lockdowns or near lockdowns. Will the easing of those economic stays, if you will, go any way to mitigate the staggering figures that we're discussing from the IMF?
I think they will. So what you'll probably see is that the global economy probably shrink maybe 10% this quarter, but as the shutdowns are unlocked, you will initially at least get a very strong rebound as shops and factories are reopened. But I think then the global economy will start to face a number of headwinds in the form of very weak demand, that lots of companies have gone bust through this, unemployment is a lot higher, and all of that will drag on global growth as well. Some sectors, for example, most notably tourism, are going to take a very long time indeed to recover.
And when you talk about that kind of knock-on effect, a domino effect almost, say, 6 or 12 months down the line, you know, we've seen, say, in the past 24 hours, people returning to industries like the building trade. That's good. They're making money again. People are building houses. But no one's going to build the house, nobody's going to buy the houses, rather, because they can't get a mortgage because they've lost their jobs.
No, exactly. So you will get this initial bounce back in economic activity as shops and so on are opened up. But straight after that, I think you're going to run into a lot of headwinds in terms of the kind of the drag that's going to come from all of the big shock that's happened over the past quarter in terms of bankruptcies, in terms of lost jobs. And that is going to weigh quite heavily on demand. And that is why governments and central banks have been stepping up stimulus to try and give the economy this extra boost when it comes out of this shock that's been induced by these shutdowns.
What form will that stimulus take?
Well, it's multiform. So central banks have cut interest rates, and in places where interest rates are now zero, they've introduced quantitative easing. Governments have also been loosening fiscal policies. So in some countries, it's in the form of cash giveaways to people. It's in the form of very cheap loans to companies to make sure that they can get through the crisis. But all this is really kind of disaster relief at the moment. It's to make sure that these companies can get through the crisis. I think in the third quarter, you'll need another boost from governments as well to provide that extra support to demand that's going to be lacking from the private sector because of unemployment and higher debt levels and so on.
Gareth Leather, thank you very much.
Thank you.
Well, as if that economic news wasn't bad enough, the world's airlines now stand to lose more than $300 billion in revenue this year. That's the latest forecast from IATA. That's the overall industry's representative body. Carriers have grounded aircraft and crew, of course, amid a growing number of travel restrictions and border closures. Let's go straight to our economics editor, Abid Ali, who joins us on Skype from London. Abid, great to have you here on the News Hour. This is kind of the blow that the airline industry was waiting on landing on top of it, wasn't it?
Peter, you're absolutely right. You know, the airline industry employs somewhere in the region of 65 million people, directly and indirectly. And so, you know, they're expecting 25 million jobs could be lost over the next 3 months unless governments step in with help. Now, we had in the United States that the Trump administration has said they'll give $60 billion to the airline industry. But the airline industry has been reluctant to take those on because part of that money comes in the form of loans, and quite rightly so, many people would think. And some of that money cannot be used to buy back shares or dividends or pay executives huge bonuses, as had been the case in the previous financial crisis in 2008. So they're reluctant to take the money. And when you look at, for instance, in the UK, the British government has said, listen, you know, we're not going to hand out huge bailouts to help the airlines. and we'll take each airline case by case and see what support we can offer. But the first port of call, you need to go to your shareholders to get your money. And you've got British Airways now, they're in the process of forlorning 30,000 employees. So this is very real economy kind of stuff. This is people's lives being affected. And you put this into the wider context, because the global tourism industry is such a huge industry. It's about almost $9 trillion is the actual value of it, and it employs more than 300 people around the world. And it's not just airlines, it's hotels, it's cruise ships, and it's your Airbnbs. You know, the little guys are suffering as much as the big guys.
OK, when we talk about the little guys and the big guys in the context of the airline industry, I noticed on Twitter, British Airways is scrapping 747 per day, every day this week. So my question is this: will this directly impact the low-cost carriers, for whom the profit margins are very small, or the big legacy carriers, the British Airways, the American Airlines, the Qantas-type airline setup, you know, those big legacy carriers who've been around for 50, 60, 70 years?
So I think this is a very good, very interesting question to put. Now, here's the thing. British Airways has taken, and Qantas, they've taken lessons from the low-cost airlines. And so they've been reducing their costs. You know, when you go onto an aeroplane, you know, they'll be giving you a sandwich rather than a full meal. And they'll be reducing other costs as well along the way. So, you know, you're paying for your baggage, just like you do for the low-cost airlines. This is going to hit all airlines. I don't think that, you know, this pandemic will discriminate as to, you know, who gets affected the most. So all airlines will need some kind of funding, or will need some kind of borrowing to get them through this particular process. In the US, for instance, if small airlines are borrowing under $100 million, they don't have to abide by the rules which say, you know, you can't use this money for anything else like dividends or whatever. This is money for you to keep people in jobs. And so I think you're going to see the same kind of support around the world from governments to airlines, which will be specific to say, this money that we give you is entirely for keeping people in work, and anything else, you need to go to your shareholders to find the money.
Abid, thanks very much.